it's neat when you get to meet people along the way. And you know, that's something I want to just touch on for a moment, because this is my first podcast. I don't need to be all about business. I will, but I want you to know that to me, what's made Miles Franklin, what's made me who I am, is embracing relationships. And all of the people who work with me or for me are friends that I go back to childhood with, or friends that I've made later in life that have been my friends long before they ever had any aspirations of working for me. Relationships mean the world to me, and where we are going, relationships ought to mean something to you all. You never understand how important a relationship is until there's a problem. You know, you don't know what you've got till it's gone type of deal. This is really the biggest issue. I mean, these are the things that are eroding the integrity of this country from within. You always used to be a third world country, a banana republic, if you had a debt to GDP ratio above 100, where we're at 123. But, you know, when you throw into it election interference, when you throw into it, you know, open insurrection, lawlessness, two-tiered judicial system and electoral system, and all of these things, I mean, we look as though we're a third world country. We look as though we're a banana republic. These are the things that must change more than anything. And that's what I'm hopeful for. But, you know, it was pathetic last night. Let's just call it what it is. I mean, they set him up, ask him questions like, you know, you called her black. I mean, what the hell? I mean, how about let's talk about, you know, like the debt. Let's talk about the crime. Let's talk about the lawlessness. Let's talk about, you know, all of these problems creating $100,000 of debt per second, or just just all of the problems that really matter, they sidestep and they set them up. It was an ambush, and it was gross to watch. They asked her snowball questions, you know, lollipop, softball, here you go. And they asked him stupid questions that have no bearing on anything in this country. You know, of course, they go back to January 6th, all the same bullshit that they've been doing. It's really gross. It's really disheartening as an American to see this kind of stuff happening. And that to me is the biggest issue. If you don't fix your fiscal house, if we don't get this in order, you know, it's one thing to talk about lowering rates. It's another thing when we're talking about $4.2 million per minute. Well, actually closer to $6 million per minute, depending upon what you look at. But you're talking $6 billion plus in debt per day, which is destroying this country. And if you lower rates at some point, you know, the people are going to demand higher rates in order to take our debt. And so this is a situation where the traditional forms of interest rate maneuvering by the Fed I believe will end up losing significance. At some point, no one's going to want our treasuries anymore. And I think you could argue we're already there when you're seeing these countries like China, who was at close to 3 trillion in 10-year treasuries, now down to under or at or near 700 billion. And instead of dumping them, they're just not rolling them over. And instead, they're replacing it with things like gold, which has doubled the performance of the 10-year treasury, but lacks the counterparty risk. And, you know, if this country had its house in order, not even fiscally, but just in terms of all of the institutions that made this country special, in particular, the electoral system, the judicial system, the immigration system, the lawlessness in the cities, all of the things that I harp on, then I think we could probably pull ourselves out of this nosedive. But even when you talk about Trump, if he wins, he's talking about, again, about imposing 100% sanctions on countries that want to move like to the BRICS. He's talking about devaluing the dollar, about super low interest rates. This is the worst thing that you can do. So I don't know that anyone will be able to fix our fiscal problems. You have to start by stop spending, number one. And I think the reason that I would like Trump to get into office is to fix the ills of the country from within. All of the things that I just mentioned, that is not lost on the rest of the world. What we are talking about right now in lowering, you know, interest rates by 50 basis points is spitting in an ocean. It doesn't do a whole lot of anything, but psychologically it's bigger, that we are giving in to inflation. We're giving up on inflation, surrendering and saying we'll never fix inflation, and instead we're just trying to, to mask its effect. And I don't know. I think inflation is here to stay. I think inflation goes much higher, and ultimately so do rates, because at some point you have to pay a higher rate of return for people to want to take your debt. Austerity is dead. Go back to 2019. The Fed said we're going to normalize the balance sheet. They tried to raise rates. The whole repo market crisis happened. They backed off. You look at the UK 2 years ago, year and a half ago, they tried to raise rates and create austerity and balance their normalize their balance sheet. Their pension program started to blow up. They back off and pivot. You look at Japan, they try to raise rates. The whole thing breaks apart. Okay, we're going to back off and pivot. You look at the U.S., try to raise rates above 5%. The banks start to implode. We're screwed. The whole Western system is screwed because they messed with Mother Nature. And messing with Mother Nature is suppressing interest rates for a long period of time that distorts the asset prices. Price discovery is dead. And when you have asset prices that are stratospheric, caused by suppression of interest rates, as rates rise and the real value has to find equilibrium with the rising interest rate environment, asset prices collapse. And that's where they're at. Either you raise rates and let the system break, or the forest fire rage and it burns down the whole system, which should have been done in 2008, because in 2008 the Fed's balance sheet was 800 billion. It's 9 trillion, or just under 9 trillion now, as they've tightened a bit, so it's 8.5 trillion. Well, they added $8 trillion in bond purchases in 15 years. That suppressed interest rates. It strengthened the bond market, the real estate market, the stock market, and there's a term in economics, and it is called oh my gosh, it is called the closest to the money supply is called the what effect? I can't even believe I can't think of it at the moment.
Some of the Cantillon effect?
Cantillon effect. Thank you.
Cantillon effect.
And it's a Cantillon effect. And this is, you can see it in glaring fashion. The Cantillon effect says that whoever's closest to the money benefits disproportionately. Look at the hedge funds and all of the big money who could borrow at next to nothing and buy assets. Asset prices have been jacked up. But by the time these folks sell, or by the time the money filters its way down to the bottom like we are now, we're at raging inflation, and people can't even afford to put food on their table, as the rich have been unaffected by this inflation at all, as their asset prices have gone way up. And that's what the Cantillon effect that's textbook. And now we're seeing inflation much stronger than we're led to believe, right? They're telling us inflation is only 3%, but John Williams says it's 11. And so, yeah, you reignite the inflation spigot. It's just going to be that much harder for low-income families, and the wealthy will get wealthier. And this is something to me that really betrays all of it. And that is, just this week, we saw 3,830 silver contracts delivered, right? Delivered. And well, that doesn't sound like a lot. Only 3,830. Multiply that times 500, you get 19,150,000 ounces delivered in one day. Now, who's got that kind of money to deliver that kind of silver? And this is something that is accelerating. So you see massive deliveries, a supply-demand deficit, increase in uses, a 7-to-1 ratio between the price of gold divided, or silver, into the price of gold is 85-to-1 right now. We'll call that man's ratio. God's ratio, the mining ratio, is 7-to-1 and falling. I don't know that you could ask for a better investment in every respect, ever. And so I think it doesn't help the fact that the price is counterintuitive. It makes people want to bang their head against the wall. But at some point, all of these facts have to align with reality. And this is what happens when you suppress and manipulate prices, where the LBMA admits to trading 290 million ounces of silver per day, but they say that's 10 times understated, because they only post the final settlement numbers, which would mean they're trading almost 3 billion ounces of silver per day. That's 3.5 times annual global mine supply, which is decreasing per day. They only have 300 million ounces that do not belong to someone. They have 800 million there, which, by the way, is real damn close to the lowest level they've ever had at the LBMA since they started keeping records. But 500 million plus, according to records, belong to the ETFs, SLV and Bullion Vault and all the others that are there. That means 300 million ounces, yet they're trading, they admit, to that whole stash every single day, and then 10 times that amount from there, minimum. So yeah, it's a situation where, you have to have strong fingertips, man. You got to hang on, and you got to realize that there are very few opportunities you will ever witness in your lifetime in investing that would have this impressive of a set of criteria to examine. Massive increasing demand in 3 or 4 uses. The plurality of demand is unusual in the commodity in and of itself. Military, green, digital, monetary. I mean, so and within the industrial applications, you have a gazillion, solar panels and medical devices and water purification and on and on and on. Silver is needed everywhere. And yet it's disappearing in nature. It's gone from 16 to 1 for 5,000 years to 7 to 1 mining ratio. And that the price is at the upper end of the stratosphere in terms of where it's been in its 5,000-year history, 6,000-year history. This represents less than 1/10 of 1% of the time that we've seen an 85 to 1 price ratio. I mean, in every respect. But this, again, when you have the Bureau of Labor Statistics changing things so frequently, it's very difficult for people to understand. John Williams, I just saw of Shadow Stat, said, no, the inflation's not 3, add 8 to it, and you are at a closer level of what inflation is. So you have 11% inflation, you have auto insurance and home insurance and all of these things that you need that are going higher in price. Food and medicine and all of the things that you need are going higher in price, and yet it's becoming a far more challenging environment. In fact, when we talk about where we are right now as an environment, we just triggered the SAM rule. It's by Claudia Sam, the economist, where if over a 3-month moving average, the unemployment rate rises by over 0.5%, you're in a recession. Well, it just went up to 0.53 above the 3-month moving average, or the low from the low point. We're there. It's had a 100% success rate and predicted the last 9 recessions. And the same thing is true about the reinversion of the yield curve since 1950. 100% accuracy. It's predicted every single recession. And employment is a lagging indicator. So not only have they been lying to us for the last year about the number of jobs, and then they revise it a year later and then react to it. I mean, they knew what it was and react to it after the fact. It's a lagging indicator. We're in a recession, and a rising costs, a rising inflation, and a little or no economic growth. That is the precursor to stagflation, and that's painful. That's the worst of both worlds. Little or no economic growth, higher taxes, and higher inflation. That's bad. That's where we're going, and yet the BLS doesn't do any of us any favors by trying to paint a picture and then revising it 12 months later. Sorry, we were wrong. And then the Fed acts upon that mandate. It's a normal world to me, but it's a different world to most people who don't understand how liquid it really truly is. And I think that, to me, has always been taken for granted. Most people don't understand that gold is wealth. And I think you look at it the same way that I do. I don't think you own gold to invest. You invest in real estate. You invest in things that produce income. But you save in gold and in Bitcoin, and you save in assets. And if you look at people who are wealthy, traditionally, it's not their bank accounts that are huge. I'm sure they're well heeled, but it's that they have a myriad of assets. And that's one of the things that that you reinforced for me in all of our discussions, is that people who are successful have assets and understand that. And those are some of the lessons that I think are so important to be learned. And that's why we thought of these questions in particular, because I think while the answers seem just easy, they're profound in how simple they truly are, that you don't need to be a rocket scientist to get ahead. You just have to understand and emulate what people who are successful have done before you. And so I thank you for that.